Good day, everyone. Trust you're doing well today. Do you know there's a way people invest and grow money in stocks, even without them knowing how to research technical and fundamental analysis? This set of people, nothing concerns them with that popular quote, buy low, say high. They just want to invest and make money. They do it via equity mutual fund. Now, how does equity mutual fund work in Nigeria? Why do some smart investors even invest in it? We will discuss everything in this video and how you can begin with as low as 5,000 naira. First, what is equity? Equity is just big grammar for shares or stocks. Now, when you buy equity, you're not borrowing money to a company, rather, you own a small portion of the company. Mutual fund is simple to understand. Now, imagine me, you, 10,000 other Nigerians contribute money and give it to a professional. Now, this professional is known as fund manager. The fund manager job is to help us, invest the money on our behalf while we sleep. Now that we have understood what equity means and mutual fund, now what is equity mutual fund? Equity mutual fund is a pool of funds, contributed by investors and handed over to fund manager, for the fund manager to help them invest in stocks. So instead of you guessing stocks yourself, experts do the dirty work. Imagine you and 10,000 other Nigerians put money together. The fund manager does his homework by looking for promising stocks, and he uses this pooled money, which was contributed and handed to him, to buy and invest in those promising stocks. Now, if the money grows, everybody smiles because technically you're making profit. But if it fails, everybody feels it. But here's the question: why do people even bother to invest in it? Basically, why do Nigeria invest in equity funds? People invest in equity funds because you don't need to know stock analysis like doing technical and fundamental analysis. You don't pick stocks yourself. Professional manage the fund and risk is spread. Risk will be spread in such a way that it's not one company stock that will be bought. There will be many company stocks that will be bought and promising stocks, but they'll be all in one basket of investments. Now, let's be honest, in Nigeria, people don't trust themselves to trade stocks, right? But then again, inflation is eating deep into savings, so people will still like to invest. So that brings us to this scary part. Can you actually lose your money in equity mutual fund? The answer is yes. That is only if the stock market falls. Technically your fund value drops as well. However, with equity fund, you are protected from sudden crash due to diversification in your fund basket. And secondly, there's a policy of 10% gain and 10% loss on a typical trading day on the Nigeria Stock Exchange. It's like a cap to which you can lose money or you can gain money. That in itself has actually protected the equity fund. It does even protect people who trade stocks. Now, how much more people who trade equity stocks? So you pretty much save in that your stocks won't, lose or crash too deep on a single trading day. Keep in mind, no mutual fund is risk-free. Even your low-risk money market fund, which most people technically, invest in, is anchored to the economic status of the country. Meaning, if there is an economic collapse in the country, you're not getting out your money, the one invested in money market fund. But then again, that's me just digressing on money market fund, basically letting you know that there's a degree of risk in all investments. But let's get back to equity mutual fund. So how much can you start with? Well, in Nigeria, some equity funds start with 5,000 naira, some 10,000 naira, some higher. The truth of the matter is, starting small is not the full story when you're trying to invest in equity fund, right? See, the real secret is how long you can stay in the market. So now, how long should you invest? That depends on how long you can actually wait. But know this, equity fund rewards patience. Another question is, can you withdraw at any time? The answer is yes. It may take 2 working days to get your cash, but some fund managers technically pay the same day. If you're investing in equity mutual fund, at some point you will come across the acronym NAV. Technically, it means net asset value. Basically, it's the price of 1 unit of the fund today. So if NAV goes up, you gain for that day. And if NAV goes down, you lose for that day. It's as simple as that. But most people technically ignore that. So how do you invest in equity mutual fund in Nigeria? But before we continue, if you're still watching to this point, it means you're getting value. So don't forget to hit the subscribe button below. So let's continue. Now, how do you actually invest in equity mutual fund? There are steps you need to take. Step one, choose a licensed fund manager or asset management company. Example of these are, ARM, Stanbic Asset Management, Meristem, FBN Quest, Chapel A Denham, Cardinal Stone, Ancoria, United Capital, and there are a few others as well. But make sure they are SEC approved. Step two, sign up and open an account with them. And once you get onboarded, that's will lead us to the step three, technically, which is fund your account. Now, when you're done funding your account, you can buy the unit of equity fund you wish to buy, according to the money you have or set aside to invest in such mutual fund, right? Now, that will take us to step four, which is manage your investments daily. So by managing your investment daily, it means check NAV, which is NAV, your net asset value. Then something else you could actually do again is monitor stocks or share index. And lastly, always pay attention to the news, especially when it concerns the economy, government reforms and policies. Now that we now know how to invest in equity mutual fund, the question now is, what set of people is equity mutual fund for? Okay, this could be patient people. And when I say patient people, I mean long-term investors or long-term planners. Another set of people this is for is salary earners who is actually looking to invest some part of their salary every month, right? So this type of investment is technically not for people looking for quick cash or fast gain overnight. If you're that type of person who is looking for quick gain overnight, you will be highly disappointed. So here's the deal. Going forward on this channel, I'll be posting equity funds that performed well every month end. So subscribe to see my monthly video on that, to enable you compare and make informed decision on the kind of equity fund to buy if you really want to invest in it. Because the equity fund you ignore today might be the one you wish you entered yesterday, and trust me, you do not want to be that person. So thanks for staying to the end of this video, and bye for now.